Welcome back, everybody. Sive is here with the Forex Peace Army. As usual, let's prepare an update and trying to create a trading plan for the Forex market, in particular for euro currency on the next week. As usual, we have prepared the weekly report. I will not bother you with the details, so if you would like to, you could read it. I'll put the link down below the video. And actually, currently, it's a very unique situation on the market. Taking all factors in consideration, we should split them between the natural, fundamental background and technical, let's call it some kind of the force majeure situation. And as you understand, I'm talking about the shutdown. So we treat, in the current moment, the shutdown risk in the liquidity factor that actually stands in tight relation to it as the major risk factor for Forex market euro in particular, because until shutdown lasts, the government can spend the money, and they have approximately around 1 trillion. So they actually pump out the liquidity of the markets, households, lack of their income. That makes the direct pressure, as on the crypto market, as on the commodities, even gold and wood, on the stocks, so you could see what's going on there. That might be the rising snowball of the margin calls as start rising, and you never know in what regional banks tomorrow morning they will wake up and see that they have the liquidity gap, and that might be the starting point. Of course, we see that the Fed has pumped a bit in the system. We see that SOFR rate has dropped back down, but this is big numbers. And the small banks could react differently. All of them have different balances. They have different unrealized profit or loss on the balance. They have different clients of the different credit quality. And even if you see some normalization in general, it doesn't mean that some bank can't collapse. This is the first moment. Second moment, that might be, as we suggest, the political pressure and tool of the political pressure over the Fed from the government, because they have created situation of the liquidity problems, and they force the Fed to provide liquidity with the repo facility, and they force them to start quantitative easing, using the shutdown as excuse. So what do you want from us? You could see the shutdown, we can't spend the money. Do something. Pump liquidity in. Cut the rate. Print money, and so on. And that's why we think that until the shutdown will not be over, the fundamental valuation of the euro currency that seems a bit better. So according to big houses, they should keep moving higher. Actually, we also think that the fundamentals for euro currency slightly better, at least tactically. For the nearest half of the year, maybe it should keep going higher. But this volatility and this actually feature of the euro currency will be depressed by the existing liquidity risks on the dollar. So we do not expect any reversal, big reversal. Maybe some wobbling will be here. We will not suggest that euro should collapse, except the moment if the cascade demand for United States liquidity starts by some collapse somewhere. If you will not consider this a force majeure situation, we do not expect that euro starts rising until the shutdown will be over. Once it will be over, we suggest some boost of the euro, or better to say, some drawdown of the United States dollar, just because of the relief of the situation. Investors will start closing the safe haven positions. The amount of the liquidity will increase significantly, and that could lead to some retracement and actually relief in the current situation. But later, when this volatility will come down a bit, euro should stay on the course of the slow growth according to the long-term targets that we have. That's approximately the situation. So liquidity risks for now are the primary major risk, and what is most bad thing about it is that it's totally uncontrolled. You do not know where something could be broken. So from that standpoint of view, we're turning down to the technical analysis, right? Keeping all this stuff in mind. So on the weekly chart, nominal trend remains bearish. Yes, we do not see big bearish progress, but still nominally trend bearish. Market slowly but stubbornly is moving lower, so we have this tendency. On Friday, we said that yes, we could get the pullback to predefined 115.50, 115.67 resistance. It's just minimum requirement pullback based on the butterfly target that we have. But keep an eye on the daily chart. Once we will get the bearish grabber, do not consider taking any new long position currently. And here we've got it on Friday. We have the bearish grabber. It suggests taking out of these lows. Nearest target of this downward journey might be around 14.25. This is next butterfly target. So it will be nearest, right? But let's it could be proceeded down to this level as well. So, but for now, 14.25. Let's keep it in mind. If you take a look on the same picture of dollar index, you could see that we also have the grabber here, suggesting further appreciation of the dollar. From that standpoint of view, now if you take a look at the 10-year bonds weekly chart, you could see that last week we've got the bearish grabber on the weekly chart. So in a normal situation, this probably should be the sign of the weakness of the dollar, because it suggests drop of the yields over the dollar, which should lead to its depreciation. But in the current circumstances, when you could see the opposite grabbers together in a dollar and on a dollar and on the 10-year bonds, it suggests that it might be, and probably it is, the safe haven issue. So demand for the safe haven, when investors buying dollars and buying dollar-denominated bonds. Taking it all together, chances that, well, market could reverse here as well on euro currency are not small, actually. So it means that on the 4 time frame chart, let's see what we have. This market has reached the level that we have specified, even climbed slightly higher. You can see this 1590 area has been reached. Next downside target here is inner ABCD XOP stands at the same area, 1422. It agrees with the butterfly target, so let's use it as well. But currently at this point, well, it is not quite psychologically comfortable, right, to go against this upper direction. You do not see, well, you see some response on the resistance, but by the overall action, it's a bit thrusty. So you can see this this acceleration here, and you are actually has doubts on whether it's now to go short or whether we should go short at all, maybe to wait. And that's absolutely reasonable. So from that standpoint of view, I prefer to see what will happen on Monday. If you take a look on the hourly chart here, I do not see yet something really special that could let us to go short, because on the grabber target, it suggests drop below these lows, which will be around 1468. So it has almost 100 pips potential to the downside, at least, which I suggest probably will be exceeded with the reaching to the next target. So it's a quite long journey to the downside, and probably maybe it makes no sense to be hurry up with this. It's better to wait for a clear reversal pattern on the top that confirms the grabber, and then make an attempt to go short. The only thing that probably could be used additionally, yes, we have here some kind of the reversal bar, but this is hourly chart. It's actually really small issue here. The only compromise that probably you could accept here is that even without pattern, since we already have the grabber on a daily, in the way, if market will show deep retracement here right back up, and you will see that risk is very small. So for instance, market will show deep retracement back to the 1580, for example. Your risk will be very small, it's just 10-15 pips maybe. You could try to take the position based on the daily pattern, where the stop's above the stop. This is if you really would like to, just based on a risk issue, so it is possible. But common approach is to wait for some reversal performance here and use the particular pattern, what it might be, something like 222 sell, for example. Something like has happened here. So if you drop the 5-minute chart, you could see it, 222 sell, and market collapsed. So something like this we could get also on hourly chart, maybe on the 30-minute chart. This also will be suitable to us. So that's probably enough for me. You understand the core let's see situation potentially very interesting, has good potential. We have clear patterns. We should be just a bit patient to get the confirmation, and then we could step in.